Because of the situation, the actual LNG buyers are taking advantage of that, and three main things that they're doing. They are diversifying their supply. They're also asking for concessions on the actual terms of the contracts as far as shorter durations, and are moving towards more balanced or portfolio of supply that's priced on oil, Henry Hub, and possibly other indexes.
To supply more LNG to the market and especially compete for increased market share within the U.S. Gulf piece of the equation, the company has 4 million tons of LNG in its marketing book today. And you may say, well, how do you have 4 million tons in your marketing book today? Well, for the 7 trains that have been sanctioned, 87% of that volume we contracted we have sold on a long-term basis, and the other 13% we put in our we put in our own book. We have a marketing company. We put in our marketing company's book, and that accrues large advantages for us because what we will do is we will fill up that 4 million tons, and once we fill that up, then we will put that 4 million tons on a train and go fill it up again. And the main takeaway advantage, though, is that we do not need to put conditions precedent in a contract saying that for incremental LNG that it's tied to a successful FID on Train 3 or Train 6 at Corpus. And that has been the main reason that we were able to successfully sign a commercial contract with Trafigura last month in January, and it's one of the reasons that we just signed a contract with CNPC, or the Chinese, that we announced last Friday. And we have made it clear to the market that we don't actually need to have a 20-year contract in order to get comfortable to move forward with a final investment decision. We just need invested capital repaid over 10 years with contracted cash flow. Because we have such a large transportation footprint that we have cobbled together over many years, that we view that as quite a large advantage. It gives us a lot of flexibility. We can actually buy gas. We have access to pretty much every basin in the U.S. And this footprint costs us $400 million a year in firm fees that we pay. And after the 7 trains are operational, all of them by 2019, 2020 time period, we will be the 3rd largest firm transportation holder in the U.S.
The emergence of China as a big consumer. China's been talked about probably for the last 10, 15 years. What we're seeing is probably a 3 or a 4x increase in actual demand and consumption in China over the last 4 or 5 years. One of the things about China is there's just really not a lot of pipeline, and you're seeing a lot of infrastructure being developed on over-the-road ISO tankers to move the LNG around.
China consumed over 40% of that 30 million tons of growth. So a tremendous contribution from the Chinese. So where's all this volume being consumed? Well, China, as Blake mentioned, has been a huge consumer, and that has been driven by policy initiatives there, mainly due to air quality concerns. But then you also have the development of new markets. You have Egypt that has come out of nowhere. You have Jordan and Pakistan. Unfortunately, we can't bank on Egypt going forward because they have a recent discovery that has been brought online offshore Alexandria in the Med that will likely turn Egypt into a net exporter once again.
This is an important trend. There is a transition in that from the days when Kathleen Icebrenner and the El Paso guys started this business, and that is that they imagined that those ships would be anchored at sea and sending gas by pipeline to shore. But the development really is that most of the new FSRUs are located at a jetty. If not in a port, then fairly nearly close offshore.
FSRUs have been instrumental in making those new markets possible and actually allowing them to incubate pretty rapidly.
GTT is also important in the floating LNG business. Both of the existing plants, Shell's giant Prelude facility, which is being installed in Australia at the moment, uses GTT technology, as does the Petronas FLNG-1, which is in operation now. The focus of our systems recently has been reducing the boil-off rate of the LNG carried in the tank. If you think about it, 10 years ago, 15 years ago, 150,000 cubic meter LNG carrier had a boil-off rate of about 0.15% per day. That was the average boil-off rate. That gas flowed into a boiler, was combined with HFO, and it provided steam to drive the ship. Pretty old technology. So for a 30-day voyage, you could consume 4.5% of your cargo as fuel. So where the emphasis has been recently is reducing that boil-off rate, because ships no longer use steam turbines. Old ships use steam turbines. New ships use diesel engines, either slow-speed diesel engines or medium-speed diesel engines, which frequently have electric power generation combined. So the best in class now has gone from 0.15 to about 0.07. So a 30-day voyage only burns 2% of the cargo. Now that's if you're doing a liner trade, A to B, and you know what you're doing. If you're trading LNG and you sail fast for 15 days and then park somewhere for 30 days, the picture's entirely different. The volumes that are coming out of the U.S., that there are not sufficient ships around yet to move those volumes, and people really should be ordering those ships if they're going to move the volumes in the 19 and 20 timeframe. We expect about 70 MTPA of new ships, or of new volume, which would translate into 50 some odd ships, which do not yet exist to take the U.S. cargoes away. Now that of course depends on where they go. It's different requirements for Asia than for Europe.
Yeah, I've always thought that once you actually get the large-scale liquefiers on the Gulf Coast, that opens up the opportunity for LNG as a motor fuel and LNG for different things like China's doing, moving it around in ISO containers. I know people have had several false starts on trying to build that business, but I think now that we've actually got the larger volumes of LNG, that those markets will develop.
Possibility for the LNG business and a new market which is expected to grow is LNG as fuel. Right now, there are over 100 ships that have LNG fuel tanks. That's what ship owners face when they sail from Europe to Asia and back, and they're trying to assure themselves that they're going to be able to fuel along the way or carry enough fuel to make the round trip. So the infrastructure is really the main question for people that are jumping off into this. And the CMA CGM business, this large fuel tank really will get them from Europe to Asia and back. So they can choose whether they find LNG fuel in Fujairah in the Middle East, or whether they find it in Singapore, or whether they find it in Europe. So having that supply assurance is very important. There are a variety of different business possibilities for supporting the LNG plants that are coming along the Gulf Coast. LNG ships that discharge all of their cargo in a distant port come back to the next loading port, and they're warm. The tanks are not at the temperature to begin to take LNG. So there's a scope for someone to provide a cool down service, because Cheniere doesn't want to cool down that ship at their jetty. It takes up their space and time. So I think we'll see in the next decade quite a bit of new business along the Gulf around the LNG trades, not just for bunker fuel, but for other businesses. In 2020, all LNG ships that sail globally will have to consume a fuel that is equivalent to or less than 0.5% sulfur. Most heavy fuel oil that you would buy would be 3.5% sulfur. So think of the acid rain of the 70s to eliminate that. So most of the ships that are LNG fueled now are small. Quite a number of them in Norway that do coastal service. GTT's recently been awarded an order for the fuel system for 9 container ships that are going to be built in China. We're also in discussions with a French cruise operator for an expedition vessel that sails to the Arctic and Antarctic. And as I mentioned earlier, we have a barge over in Orange, Texas, that'll be completed this year, that will go into service for tote. It'll provide LNG fuel to their container ships that sail between Jacksonville and San Juan, Puerto Rico. Right now, they're being loaded by trucks.
The Cheniere's business model is different than the 4 other LNG projects that are currently under construction. We are responsible for going and buying all of the gas in the U.S. market, bringing that gas to our terminals, and we sell LNG either into our customers' vessels at our docks, or we sell it at the point of consumption at a customer's port of designation, or delivered to the end use market. And so, as part of this commercial offering, we have to manage all of the flows of gas to the terminal. And if you look at the other business models that are pure tolling models, the other ones that have been sanctioned that are non-Cheniere projects, the off-taker manages all of the gas procurement needs and is responsible for the transportation infrastructure, et cetera, to get the molecules to the plant. The challenges in the Gulf Coast is that the storage infrastructure was not built for high injectability. It was built for high withdrawals and low injectability, because those withdrawals were to satisfy power demand last minute, for example.